The Fibonacci is a retracement measuring tool available on several platforms. It doesn't matter on TradingView, MT4, or any trading platform. And after a push of any impulse, market makers book profits, thereby reducing the momentum of the market. If the market makers push up, they usually will book profits after a substantial movement, and this results in market retracement or market pullback. So after an impulse, we'll see market retracing to probably continue with the initial trend. So in this video, we will learn how to find the right entries using the Fibonacci retracement tool. But before we go through, make sure you subscribe to this channel and check the notification bell icon if you haven't done so that you won't miss any of our content as we upload. So what is the Fibonacci retracement tool? And as we have earlier defined it as a retracement marker, we actually call this tool a retracement marker in short because it has several of them. However, for this video, we respect two markers on the Fibonacci retracement tool, and these are the 38.2 and 61.8%. There is 0, 23%, 50%, 75%, and you can even add more. But for this particular video, we'll be focusing on these two, the 38.2 and 61.8. So to remember the sequence of how to use the Fibonacci retracement level 2 before we have deeper explanations, we say after first impulse, we expect an MOW at 61.8, and after second impulse, we expect MOW at 32.2. These are actually marked as shown in this example. So what we are saying is this is actually the first impulse, the second impulse, and then the third impulse. As we'll explain later in this video, we know that a cycle consists of 3 impulses to the upside, or basically 5 waves if we are in Elliott wave theory. And for the first wave or first impulse, first 5 waves or first 3 impulses, we expect to see the market retracing at 61.8 retracement Fibonacci retracement level. Then after the second impulse, we expect to see the market coming back to the 38.2 Fibonacci retracement level. So how do we find entries using this particular tool? So in our case, we use the institutional market maker method where we count levels. We know that a full cycle of market flow consists of 3 sets of 3s. By that we mean we have 1, 2, 3, right? Restart of the cycle, 1, 2, 3. Restart of the cycle, 1, 2, 3, like that. And after the first set, we expect a reset, right? A reset is basically a restart of the cycle that will occur at 61.8 Fibonacci retracement level, which must present as a multi-session M or W. So in this particular context, which is an upward context, we expect to see a multi-session W at 61.8. So let's now go over the charts to see real market examples for us to understand. But before we do that, we have an advanced institutional market maker method course that may go deeper with our concepts, and it's going for $99. You can actually send a text on WhatsApp or actually use the link that I've left down in the description box below. All right, so this is pound against US dollar. On pound against US dollar, I've selected this pair. This is the current price at this point. I've selected it because it has very clear impulses that everyone can actually see. So the first thing, as I've said, or to remember our sequence, we said after three impulses, we actually expect to see first three impulses, we expect to see retracement at 61.8, and then after the second 3 impulses, we expect at 31.8, right? So in this case, we had first three impulses. After these first three impulses, we were now expecting to see retracement at 61.8. So we basically pulled out the fib retracement level 2 from the default indicators of the MT4 at this point, right? Then going to the upside, which is at this point, lowest and then the highest. At the highest point, we were expecting to respect 61.8, where the market came and gave us this candlestick reversal pattern. However, this was actually an extended W, where the market makers had to actually grab some liquidity in that zone, giving us an entry point like this one, right? That was the first impulse, or the first set of threes. After that, we can see the restart of the count. We had 1, 2, right, and then the last one, which is 3. This becomes the second set of threes, and on that we are actually now expecting to see a pattern at the 38.2 like this. So we need a W around this zone to actually continue with our market flow. So having another example, this was USD against CHF. I'm not going to mark the levels or the impulses on the smaller time frame. This is the H4 time frame. So we had 1, right, and we had 2, 3. Then here we had 1, 2, and 3. So to give as an illustration, our first retracement is actually obtained at 61.8. In this case, at 61.8, which is this line, we had what we call an inverted head and shoulder. We have the shoulder, head, and then the shoulder to restart the cycle to the upside, right? After that, we can see we were issued 3 more impulses to the upside, where we were now expecting to see respect of the 38.2. You can see that the market gave us a W pattern at the 38.2. However, the market makers are there to vary the theme. In some cases, you'd see that they may not respect these fib levels, and you need to use other means to find these entry points, and those are the ones that we also teach in our advanced course. On that note, we come to the end of this video. See you on the next one.